Just wanted to shed some light a little bit more about the mortgage relief program, and essentially what essentially your bank would be potentially offering you. Again, every bank has probably their own program that they're going by with. So this is just shedding some light on two different programs that I've run across from, and that I think would be something that your bank may offer you. So let's get right into it. I just wanted to start off with some disclosures. Just wanted to let you know that my numbers are approximate and only an example basis. I've done some scenarios in the background, and this is the approximate figures that I came across. This is only to give you an idea of generally how it works. Again, it's not exactly what your bank may offer you, so don't tell them, well, Anas talked to me about this, and this. Again, they might have their own twist to it, okay? Every lender has their own policies and measures to see if you even qualify for it. They may ask for some certain documentation, different type of income that you may have. I don't know. That's something that can pop up and be determined essentially if you qualify for this or not. And also, please note, there's a massive amount of changes in the market on a daily basis. There's always something new that's popping up, maybe a twist in the tail. So again, this is as of March 27th. If there's something that pops up tomorrow or early next week that contradicts what I'm saying, again, don't hold me to it. I'm just letting you know from what I know so far at this point. Okay, so I just want to start off and put you into a situation where I can give you an example of how it would work. I'm basing myself off of a mortgage, that means a mortgage of $500,000 with a 3% rate for a term of 5 years. And I'm basing myself off a 25-year amortization. The total mortgage payment for this sort of mortgage with 3% would be about $2,366 per month, where your property taxes for property approximately of that size would probably be $400 per month. Okay, so that means your total mortgage and property tax payment would be roughly $2,766. Okay, so in the 6-month deferral program that most banks are apparently offering is essentially allowing you to have no principal, no interest payment, but they may still require you to pay your property taxes on a monthly basis, as many lenders will collect taxes from you just because it's in order to avoid the risk of having the city come ahead of them, because the city is always ahead of the mortgage holder in case you default on either tax payments, right? So essentially, if your lender is collecting your property taxes, that would probably be the only payment that you'll have to make, unless, depending on the city you're in, maybe they're allowing you to not pay property taxes. I haven't heard of any of that happening, but if that's the case, then obviously you would have zero payments to make. But yeah, on the 6-month deferral program, essentially you'd have to make any property principal or interest payments, make your property taxes. So that means for someone that has that example that I was talking about earlier, would result in almost $2,366 per month in savings, right? So that means definitely you'd be impacted financially. Maybe you're not able to make these payments, or your debt load is so high that if you could use an additional $2,366 in your budget in order to make sure you stay able to pay your bills and whatnot, right? So that would be a massive savings, obviously, as you can understand. Let's go a little bit more into what the deferral programs really means to you. Keep in mind that it is not an interest-free period where you don't pay your mortgage and there's no impact. Obviously, you're paying interest on top of the interest that you are saving, as well as the principal. So keep that in mind. So essentially, the interest that will accrue from from this no payment or the payment deferral will be added to your mortgage balance. So that means it will drive your payment up. Okay, bank may spread it over two different types. They can spread it over the remaining life of your mortgage, so over the amortization, or over the remaining life of your term. That's in the event that they want you to be back on track by the end of your term. Okay. Again, we're not anticipating this to last years over years and over years, right? So we're expecting this being a temporary thing, right? So here's an example of the two. So an example where they would add the accrued interest on the remaining life of your of the mortgage, which would be the whole amortization that's remaining, as well as the other example would be the one if it's over the life of your term. Okay, so keep in mind that we're 1 year inside of your mortgage here. Okay, so that's why you'll see the remaining life of the mortgage is 23 years, 0.5. That means you're a year in, you had your 6 months deferral, that's where you're at, okay? And for someone that's in a 5-year term, essentially we're 1 year inside the term, and then you had essentially the remaining years being 3.5 years, okay? So let's go with the amortization one. So essentially in both cases, your mortgage balance after 1 year would be at $472,240. We add the accrued interest, which I've noted at the top of the slide right here, which is $7,600. So adding that to the balance brings your balance to $479,840. So then your new mortgage payment in the amortized, essentially the life of your mortgage scenario, then your payment would increase by about $35 per month. You say, well, you know what, it's not that bad. It's probably the cheapest loan that I can get at this time, right? But in the event that they will force you to get back on track within your term, that's where we're looking at the other scenario. We're looking at essentially $180 more per month. Again, it's not that expensive because, again, this interest over 3%, but just the fact that you're paying interest over interest can scare a few people regarding to that. But at the end of the day, it's worthwhile in order to make sure that you don't get behind on mortgage payments. That's the main thing here because that has massive implications, and I'll get to that next. So here are like 4 or 5 things that I want you to make sure that you understand before you get into this. First off, do not miss a mortgage payment, assuming that they will grant you this payment deferral. Okay, that's massively important. Okay, they won't really care if you miss a mortgage payment and say, oh, you can excuse it later on. No. If you miss a mortgage payment, that will be a defaulted payment. Okay, so make sure that you get all your information in place, that you qualify for this program, and that at that point, then you can defer payments. You get essentially, when you speak to your bank, you get a hold of them beyond that long wait period over the phone. So you get the proposed structure in writing. They can send it to you by mail or by email, and they probably will send it to you both because they want to make sure that you've received it, and you'll probably have to sign in order to allow that to happen. Okay, so it's just kind of making sure as well on your end that the person who you spoke to knows what they're talking about. They've put it in place, and you know, like it's not something that they can later go back on and say, oh, no, that's not how it works. That person didn't know what it was talking about. No. So when you get that proposed structure in writing, essentially the bank has to go by that, okay? Unless there's any disclosure saying that they can withdraw that at any time. How will your bank report it on the credit bureau? That's another massive and very important information that you want to get to. Essentially, you want to make sure that it's not going to report on your credit as missed payments. Okay, that's very important because down the road that can change everything for you. You know what I mean? Later on, if you wanted to extend a further credit and whatnot, you might not be seen to the banks as the same, right? So you want to make sure that on your credit bureau, it's not going to report negatively. Okay, so there should be a way that the bank will report it to the Credit Bureau in a positive manner rather than a negative manner. Okay, and then make sure you understand what you're getting yourself into. If you don't understand, kind of leads to my last point here. Get a second opinion. Get whatever they offered you by in writing, and you can share it to someone like me, a professional mortgage agent, or someone that you trust, and we can review it together. And I can explain to you a little bit more what certain terms or certain conditions that they have on that document, so like that you fully understand what is happening, and then you can make a decision if you wanted to move forward with that or not. So that's pretty much it, guys. Thank you for tuning in this video. And again, if you have any questions, feel free to reach out to me. I'd be more than happy to look at every situation. And as I know that it is a kind of like case by case, different lenders, different programs. So feel free to reach out, and you can make a smart decision after that, well educated. Thank you so much.